had this same event last week, but 2 weeks ago, but couldn't get the recorded version ready. So we had a lot of requests for another one. So basically, it's a repeat of the last one. But if anyone's got any questions about the accounting side of things, we can pretty much answer any question. Well, Imran will be here to take your questions. But he's going to go through some of the basics first, and then after that, any questions that you've got, the floor will be open for the questions. So yeah, Imran, over to you.
Okay, yeah. So my name is Imran Butt from Centra Consultants. We're an accountancy firm based in Manchester. We've got 4 full-time accountants and a few admin staff. We've got over 600 locums that we do accounts for. And so the number one question always is, should I do it as a sole trader or as a limited company? So they're the two routes people have when they become self-employed. Whereas when you're employed, like when you guys did your pre-reg, they just deduct the taxes, NI and whatnot, and they give you what they give you, and there's no other options. When you're self-employed, you do have 2 routes. So you've got your sole trader route, you've got your limited company route. But realistically, there isn't actually an option. It is, if you want to keep your taxes down, the only route is limited company, because a sole trader, that's for people who are not sure, like most businesses, are they going to be successful or not? So most businesses, they've got money they need to invest in a business. They've got to do marketing. They might need to get a warehouse. They might need to get a shop to rent out. So they've got a lot of overheads. This isn't the case for locums. Just pay their professional fees, which isn't that much. And then, with high day rates, you already know 100% you'll make profit at the end of each year. So that's why it's more important to be tax efficient from day one, which would be a limited company, because essentially limited company only pays 19% tax. A sole trader will pay 20% tax plus national insurance as well. And then once you cross £50,270, which most locums do in their first year, the tax would then jump to 40% as a sole trader, whereas with limited, it will stay at 19, and you've got a lot more expenses you can put through as a limited company compared to a sole trader. So essentially, there isn't, even though there is an option, there really isn't when it's from a tax point of view for locums. It's a limited company. And in terms of forming a limited company, you can either do it yourself or an accountancy can do it for you. We don't charge our clients to form a limited company, but at the end, there is an application fee that we have to pay Companies House, the government, £12. So we just add it to our fee, but we always prefer to form the limited companies for our clients to make sure the SIC code is correct, shares are done correctly, it's just set up correctly so there's no issues further down the line. It's on mute.
Right. Some of the common questions that you get from newly qualified pharmacists is, how soon should you set up your company? Should you wait, till you start working, or just get everything ready as soon as you get your results?
So it depends on when you're going to do your first shift, but I would say approximately 2 weeks before your first shift, you want your company to be formed. First step is to get the limited company formed. Second step is to open up a business bank account. If you go with the online banks, Monzo, Starling, Tide, Revolut, they'll open up within 24 hours. But if you're going to go with one of the mainstream banks, they can be anywhere from 2 weeks to 8 weeks to open up. So depends on who you're going to bank with, but you definitely want the limited company and your business bank account open and ready before your first shift, so that from day one you're invoicing in your business name into your business bank account. So everything is like tax compliant. You've ensured that your structure is in place so that you pay the least amount of tax legally possible when you get to the end of the year. So definitely better to get it formed before you do your first shift. Plus afterwards, like trying to change bank details with agencies and pharmacies is a lot harder than a person might think, trying to call up departments and say, oh, actually, I know 2 weeks ago I said this was my bank details, but now it's these ones, and getting that changed over can be a bit of a nightmare.
Okay. Just got a quick question here. Start as a sole trader, I'm guessing. Can I change it to limited company? And how? Thinking I claimed as solo till now.
It just means make it forming a limited company. Once the limited company is formed, business bank accounts open, everything's going into the LTD. Whatever you did prior to that point would just be recorded as a self-assessment, which is essentially you paying tax like you were an employee, but without any employee benefits.
So can I just ask the person, MB, how long have you been working as a sole trader? Two years now.
Wow. Okay.
Okay. And have you paid your first tax yet? Or yes. Okay. Yeah. Yeah. So you'd have probably saved a lot more if you were registered as a limited company, as a locum. But you learn these things as you go. So I'll probably suggest getting onto it now. Can give him a call straight after the well. You can send him an email or contact him tomorrow, and get yourself set up as a limited company. Um, till Jan next year. So when you say till Jan next year, you don't need. You can literally set up a company at any point and transfer everything over. You don't have to stick to the sole trader just because you're set up
Yeah.
as sole trader.
That's just the deadline to pay the tax anyway. The actual year
Yeah.
ended on the 5th of January, and it's 5th of April, and the new tax year started on the 6th of April of this year, which will end on the 5th of April next year. But at any point, you can become a limited company. You won't continue doing this and end up paying more tax.
Yeah. Okay. Hope that clarifies your question. Okay. So I think another common question is the umbrella stuff. So a lot of the farms on our network work in hospital as locums, and they get the option of working with the sole trader as under umbrella or under PAYE. Obviously, NHS doesn't allow you to work under limited company. So, what's the difference between the working under PAYE and an umbrella?
Well, working under an umbrella, they're deducting the tax and NI. So you wouldn't realistically, if you're working in the NHS, like bank work and whatnot, you wouldn't realistically need an accountant then. They'll just be deducting all the tax and NI and paying you into your personal account.
Okay.
But there's just no benefits in it for you because you are getting taxed like you're an employee, but without any employee benefits.
Okay. And if you were to go on the PAYE, then you wouldn't have to pay any tax, right?
Yeah.
That'll all be done by the NHS.
Yeah, they would do all the deductions.
Yeah, yeah. I think one of the things about again, this is a question I have over the last few days about the umbrella stuff. We don't make any recommendations, and we can't really make any recommendations for which umbrella company you decide to go for. But what I'd suggest is doing your research, because some of them, they do really try and skirt the law, and just you can check on the HMRC website which ones are compliant, which ones are not. They do some really interesting accounting which are really on the grey area. So if you're going to go with any kind of umbrella company, do definitely check with HMRC that they are definitely compliant, and
because HMRC has got a list.
Whatever you sign off as your end of year accounts, you'll still ultimately be responsible because it is your accounts, it is your money. You should be able to know whether something's right or wrong. To be honest, most people, when it comes to umbrella, most people don't, but at least do your research. Get a check with HMRC to see whether it is a company that's compliant. And if it's not, there's like thousands of umbrella companies out there, so you wouldn't have to stick to one. Or again, the agencies won't really be recommending one. They can probably just give you a list of umbrella companies to go with. So the question from MB, how can I change? MB, do you want to just ask the question on turn your mic and just ask the question, because I'm a bit confused with what you mean. How can I change?
No, I think they mean like how can they change from self-employed to forming a limited company? But realistically, they just need to get in contact with either ourselves or another accountancy firm, and they'll like walk them through it.
Okay. Got a question here from Priyanka. If NHS employed part-time and locoming part-time, is it worth to set up a limited company?
It depends on how much you're going to earn, but more often than not, you are still better off forming a limited company, but it just depends how often you're going to locum and how much you're going to earn as a locum.
So what would you say is a threshold for deciding whether to locum or to set up a limited company or stay as sole trader?
So it's like two things. One is going to be working out what the tax. So if a person said, I'm going to earn £10,000 in a year as a locum, we're able to work out what the tax would be as a sole trader. Because if you do it as a sole trader, it goes on top of whatever the NHS job is. So if they're with the NHS, and let's say they're on £42,000 a year gross before any tax or NI has been deducted. When you do a self-assessment, the 10,000 sits on top of the 42, making your total for the year 52, even though that's already been taxed. They put the income back in, the tax back in, and that is calculated from that point. So some of that 10,000 you get as a locum, essentially 2,000 will get taxed at 40%. And then if you do it as a limited company, we would work out what the tax would be for a limited company. And then that difference, we have to make sure that that difference is worth it once you factor in the accountancy fee as well. So each accountant's, each firm's fee would dictate at which point it's worth it for someone. So you couldn't just straight away say, oh, it's worth it at this point. It all depends on what the fee is. But that's the job of the accountants, is to work out ultimately what's going to cost their clients the least amount.
Okay. So just a quick question, Priyanka. How many days a week do you locum outside of the hospital? Priyanka, can you hear me? No. 2 to 3 days.
Yeah, it's just quite a bit.
Yeah, so I mean, if you're working, say, earning on average 200, 250 a day, then that's what, 750 a week. Yeah, that you'd probably, I think what last time we worked out, it was 18,000 and above is where
that's like when a person isn't employed. So 16,000 and above for us. So just speaking from Centra's point of view, anybody that's earning 16 or above, they would be better off forming a limited company. But that's if that's their only income. So if they were earning less than 16, because 12,500 is tax-free anyway. So if they had no other income and they were earning 13, 14,000, there's gonna be next to no tax to pay. So it wouldn't make sense forming a limited company and going through that process, paying a higher accountancy fee if your tax is only going to be a few £100s, if in the whole entire year you earned 13, 14,000. But that 16k that we mentioned on the last video, that was just based on if that was your only income. But Priyanka could already be on 30, 40, 50k, with the NHS at the moment. So if she's already doing 2 days, well, she's probably around about 30, 35k with the NHS if she's only working a couple of days a week and then a couple of days as locum. But more than likely, it'd be better off forming a limited company because she's still earning a decent amount in a year. And the tax on that would be high as a sole trader.
Got a question. Do you do self-assessment for locums or do you only deal with limited companies?
Yeah, we do both. You have, even when you form a limited company, there's still a self-assessment to do. So all of our clients that have got limited companies, we still have to do a self-assessment for them because they do have other income to declare. Quite a few of them have rental income, or they've got property income from like commercial properties, or just their dividends from their limited company is declared through a self-assessment. So all of them do it anyway. Fees for self-assessment is $299 for the year, and for limited company, so this would be your limited company accounts, your tax returns, your payroll for the limited company, and a self-assessment is $659. It is going up to $699 from the 1st of October.
So that's your yearly fee for limited company.
Yeah, limited company yearly fee $659 currently, $699 from October 1st going forward, and that covers everything.
Okay, cool. I've got somebody else waiting to come in. Right. Yeah, so the basic thing, I think we've just gone through that. Does anyone else have any other questions about locuming? No. What does it mean when you say write-off expenses?
Yeah, that's a good one because people use that term all the time, and sometimes people also think like money's going to come back to them or whatnot. But all it basically means is when you've got a limited company, you can write off expenses, which is a limited company doesn't pay expenses, like doesn't pay tax on the expenses that it has. So when you like say for example you need to buy a laptop to do your bookkeeping, you're not going to pay the tax for that cost of the laptop because that was an expense. For example, if we say a person earned £50,000 in a year and then they spent £2,000 on a laptop, they're not going to be paying tax on 50,000 because 2,000 of that was an expense. But obviously, you've got a lot more expenses than that. You'll have like your mileage is deducted from that 50K. You got a meal allowance that's deducted from there, office rent that's deducted from there. You keep deducting all of these, and whatever's left, which is the profit, that's what you'll pay your tax on. But through a limited company, you've just got a lot more expenses. So what you ultimately pay tax on is a lot less than what you would as a sole trader. And then the sole trader's tax rate is higher on top of that. So there's less expenses and the tax rate's higher, plus NI to pay. And with a limited company, you've got a lower tax rate, no NI to pay, and a lot more expenses to put through.
Okay, so yeah, it's definitely worth registering as a limited company if you're going to be working, if you're going to be locoming full time or even part time. Got a question from Helen. I missed a bit where you mentioned about being full time employed in the NHS but looking to locum during weekends. What would you advise be for newly qualified pharmacists? If you're working full time for the NHS and locuming on the weekends, again, like Imran said, it depends how much you're going to earn. I think, and depends on the NHS salary as well. But I think if you just contact Imran and you just go through your figures with him, how much you're making with the NHS and how much you're likely to earn working on the weekends, I think on average your weekend rates are going to be somewhere between 250, 300, 350. And if you do Saturday and Sunday, you'll probably make up to about 500, £600 on the weekend. Say go with roughly 500, so in a month you're earning £2,000. So in 12 months you're earning roughly £24,000 on top of the NHS salary. So yeah, it's whether that would be worth setting up a limited company over. And if you reduce your NHS work and spend more time locoming, then I think that might be worth becoming a limited company. What do you think, Imran?
Well, even like the example you've given, 24,000, even if let's just say 20,000. So say if you've got a full-time or part-time job employed in the NHS and you locum on the side and in a year you made £20,000, you're probably looking at a sole trader tax bill of around about 8,000. You did it through a limited company, you're probably looking at more like 2,000, 2,500. So there's a big difference in tax.
Yeah.
It's very rare to find a situation in which you would actually suggest a locum to be a sole trader. Very rare. If somebody said, I'm going to locum twice a year, I've got a full-time job as a pharmacist or dentist or optom, and I'm getting X amount, and I'm just going to literally locum twice a year, then okay. For that person, you would say, doesn't make sense. A limited company, it's very rare that you would say, be a sole trader.
With limited company, do you have to pay advance payments in account for next year, similar to sole trader?
No. So what payment on account is, whenever, as a sole trader, this is what shows that it's not really actually meant for anyone to actually do who's making a profit, because whenever your tax bill is over £1,000, and for a tax bill to be over £1,000, it means there was profit, because your tax is based on the profit a company made. So if you've made a profit and then your tax bill is over £1,000, what HMRC wants is that tax bill up front for the following year. So the assumption is that person X made 50K this year, the tax bill on 50K will be roughly around £16,000. The assumption is he'll make another £50,000 next year. So we want next year's tax of 16K up front with the first year. But what they'll do is they'll split it into two. So they'll want half of that 16, so 8,000 with the actual 16K tax bill. So they want 24K by the 31st of Jan, and then another 8,000 by the 31st of July. So that's payment on account. Limited company doesn't have that. Limited company is you just pay the tax that you owe, which is already like roughly about a third of what a sole trader would pay.
Okay. What else can you claim as a limited company, as you said, as a sole, I don't have any explicit. Thank you. Yeah. So basically, in terms of what you can claim, anything to do with your business expenses, even your training, like if you're a professional member of 2PC, that money you can claim back as an expense. If you pay for your indemnity, RPS membership, if you do your IP training, all of that can be claimed as an expense of the business. Mileage, food allowance.
Yeah, as a limited company, not as a
Yeah,
sole trader though.
as a limited company. Yeah.
Yeah. So as a sole trader, people think you can claim mileage as a locum, but you actually can't when you speak to HMRC because there's no one to claim from. Two things. One, as a sole trader, it's like you're a one-man band, like it's just you. So there's no one between you and HMRC. So there is no one to claim it from. You know, if HMRC asks the question, who is it you want to claim the mileage from? Essentially, you'd be saying, I want to claim it from myself. And they'd let you know that's not how it works. So you're missing out on the mileage, you're missing out on a meal allowance, you're missing out on office rent. So there's quite a bit of expenses you have as a limited company, because with the limited company, even though everything seems the exact same and it's like semantics, it is a separate legal entity from yourself. So it is a different thing, you know, that now you do have a separate legal entity between you and HMRC. So things do work differently, even though it seems like it's the same.
Essentially, I think as a limited company, your company is your employer.
Yeah.
So with so if you set up a locum farm limited, and that's your the name of your locum company, that you've registered locum company, then you're essentially employed by that company, and any work that you do for, say, Boots, Lloyd's, or whoever, they pay your employer, which is your limited company, and then your limited company pays you in dividends. So
And salary.
and the salary, yeah. And then you obviously claim your expenses back from your employer.
And then your limited company can give you perks like a daily meal allowance. You give you money towards your office rent costs, could pay for your private medical treatment, private medical insurance, healthcare, whatnot. So these kind of perks you could get as an employee of a private limited company that you couldn't get as a sole trader.
Okay. Yeah, and I think we've kind of gone through all the questions.
Another one we always get is about the VAT. So just let you know, anyone that's in the healthcare profession, they are exempt from VAT. So that means as a locum, full-time working locum, you could earn over 85K and you wouldn't have to register for VAT.
Yeah, actually, we get that quite a bit on the lounge as well. How can you claim car purchase? Does it have to be a new car? Or does it? How does it work? Considering getting more reliable one.
So when we've gone through the numbers in the past with the accountants, it's never realistically worked out for locums to get a car through the company. Because if you get a car through the company, then it's working the opposite to how it normally is, which normally you would be using your personal car for work purposes. So your company would pay you 45 pence per mile for the first 10,000 miles, then 25 pence for all the miles after that. So you're getting paid from the limited company to have access to that car. When you go get a car in the company name, now it's the other way around. Now you're going to have a business car that you're using in your personal time. You now have to pay for that right, which is paid through your self-assessment known as benefit in kind. So that will depend on the type of car you got. So electric car is the cheapest option, where you're paying only 2% of the value of the car each year, or the P11D value of a car. But otherwise it's based on, is it a diesel, is it a petrol, is it a manual, is it an automatic, what is the engine size, what is the CO2 emissions? So you have to work all of that out to work out what you'd be paying to have access to that car personally. That can go from the hundreds all the way into the thousands per year, because it's based on the P11D value of the car, which is like the new value of the car minus, I think, some of its taxes at the beginning. So if, for example, you bought like a £6,000 Golf, they're basing the P11D value on the car when it was new. Like, the car could be like 10 years old now, but the showroom price might have been £19,000, and you're paying a percentage of that each year. So more often than not, it doesn't work out. You're better off just claiming the mileage.
Yeah, but I think when I've always paid for the car up front. and then just claim the mileage back. If you're claiming the mileage from from the company when you're locoming, obviously you then claim the mileage from your own limited company as well. So to be honest, you make back a lot more from just claiming mileage rather than buying a car through the company.
Even if you just take a small example, if you say a branch was 50 miles away, so you've gone 50 miles there, 50 miles back, that's 100 miles in a day. From your limited company, multiply that by 45 pence a mile, that's £45. And for a person to drive 100 miles, they wouldn't even need to put £20 worth of fuel in their car, and they'd get a lot more than 100 miles out of it. So you're making a good 25, £30 per 100 mile. So if a person did 1,000 miles in a month, which often locums do, you're making 250, £300 extra on top of the actual fuel cost. And then most locums will just use that extra money they've got from their limited company and put it towards their car payments.
So you can do the same with the claiming the mileage from the company as well when you're doing locoming. If you're getting paid full mileage, you'll be claiming the mileage from the company as well. So in effect, you get paid double for that. I'm transitioning to a new role within a few weeks now. Locoming in the meantime, is it worth setting up a limited company? Adrian, I think that depends on how long you've been locoming, and the period from now till your next role, when that will start, and whether you be locoming on the weekends as well in your spare time. Again, just give him a call tomorrow or send him an email. And
yeah, if anyone wants to get in contact, if you WhatsApp me your name and let me know you want a call back, I'll let you know what slots we have available and we'll get a call booked in.
Zareen, I'm just gonna once the event is finished, I'll download it and share it across the network, and I'll put it on our website, on the TPC website as well, so you can just download it from the way you can just watch it on there. How much tax do I pay for dividend paid by a limited company?
So up to 38,000 is going to be 8.75%, and then anything above that, it would be 33.75%.
Okay.
And hardly anyone of the locums will ever pay that higher rate just because of normally what the turnover for the year is. And then dividends is your profit left in your business after all expenses. So it's not like that's the only money you're receiving. You've got your salary for the year, you've got mileage you received from the company, you've got a meal allowance from the company, you've got office rent from the company. So after all of that, the profit left at the end after the tax has been paid, that's your actual dividends. So even 38 is quite a lot for a locum.
Okay. What's the annual fee you charge for limited company? I think you've gone through that. I think for limited company and sole trader.
Yeah, I'll just say it once again though. So for limited company, it's the limited company accounts, the limited company tax return, payroll, and self-assessment. It's 659 currently. From October 1st, that's going up to 699. We've had the price of 659 since 2018, so it's the first time we're putting it up, and I'm going to try and hold this price for the next 3-4 years as well. And just self-assessments on their own is 299.
Okay. How best do I pay my tax if I locum part-time? Sorry, what do you mean? Could
Probably
you?
the same kind of question they're asking, like which one's going to be least amount of tax to pay.
Just suppose limited companies again. I think it boils down to how much work you do as a locum, how many days a week.
Yeah, what your overall situation is.
Yeah.
Some people are receiving rental income on top and other income revenue streams. So you got to kind of like look at the whole picture and work out from there what's going to work out the least.
Okay. Cool. Any other questions? So for Sin Lee, There's some companies that accept limited company accounts and others don't. I think at the moment the only ones that don't accept are the Venlock ones, and of those, I think there's only two companies left. Even Lloyd's has moved over to locate a locum platform.
No. Isn't it Asda that's moved over?
I think Lloyd's has moved as well, as far as I remember. Um, Asda has definitely moved.
Yeah,
So I
Asda's
think
on
there's only
Locate a
literally two
Locum. I
companies
thought it was
left.
only Lloyd's and Morrison's on Venlock now.
I think Morrison's are thinking of moving over to um, thingy platform or to locate local platform as well. And I've seen Lloyd's on there. There was some stuff going around about Lloyd's moving over.
Yeah,
Obviously, they're
I don't
closing
believe
down
it'll be
some.
long anyway now. Once Asda made that move, because
Yeah,
it was making an impact on them because
yeah,
locals weren't registering with Venlock and working for Asda. But now that they've made the move to locate a locum, I think Lloyd's and Morrison's will follow.
yeah. I mean, Lloyd's is practically closed down now anyway. Most of the branches have been sold. So yeah, it's just anyone who's on Venlock won't take limited company. So just ignore them and work with everyone else, and you should be fine in terms of working under limited company accounts. I don't know of any other company that won't deal with limited company at the moment. Can the cost of accounting be included in the tax expenses?
Yeah,
It is. It's an expense for your company, so yeah. In terms of mileage, did you say we could claim mileage from the limited company alongside negotiating full mileage from the pharmacy? Jeremy, I mean, that's what I've been doing. If you're working for a company, negotiate full mileage to be paid. And obviously, if you're working under your limited company, then you claim mileage back from the company.
yeah. It is just recorded differently though. So any mileage you get from the pharmacy direct, so if you've negotiated mileage with them, that's still going to be paid to you as part of your income. So it is just like a perk to your income, like a little top up to your income, but it's still counted as your income. But they might have not paid you, like Boots often doesn't pay for the first 20 miles of a journey each way. But so the mileage that you're recording for your limited company, the one you're claiming back at 45 pence a mile, that is from your doorstep to work and back home again. So that'll be the full mileage from your limited company. The one you receive from the pharmacy, that's just whatever that income you receive. It'll just be part of your income. It's not gonna go be recorded as mileage.
Okay. Any other questions? What about if you go as a partner with someone else with just a small percentage and you work as a locum in the same time?
Partnering what?
Yeah, I'm a bit confused about that one.
Maybe like in another business, and they might only make a small return from there. But I mean, that might allow a person to locum a lot more. So then the answer would still be form a limited company. If you're going to do over 16K as a locum, and even if that's your only income and you've not got an investment in anything else, it should still be a limited company.
So do you mean if you co-own a pharmacy? So as a partner in buying a pharmacy, okay. So if you both own a pharmacy and then you still work alongside as a locum, okay, got you. Yeah, because basically the two different incomes, isn't it? So if you own a pharmacy, that's a separate business, and then if you decide to locum on the side, then again that's a completely separate business. So you have to see it as two different entities, the two different businesses. So your limited company is just a separate company. Your pharmacy that you co-own with a business partner is another company. So what you do through this company is different to what you do through that company. And then if you locum through your locum company, you get paid through there. Anything to do with locuming side, you claim as an expense from that side, and anything you earn from your company, your pharmacy, that's again a separate business with a different set of accounts and expenses and shareholders and stuff, and whatever you get back as dividend. Again, I think that's a different one, isn't it? So like, I think this is a bit that would probably need to be a bit more clear about. So if the money that you take out from your limited company as dividend, and then money you get from other sources as dividend as well, I think how would you then deal with the tax on that? question to you, Imran.
No, all right. Sorry, I was just typing a message. What was that?
So, say I think just going back to MB's question. Say you earn the money from locoming, say you earn £50,000, and then after taxes and after all the expenses, you come out say £30,000 that you take as dividend, and then you take out I don't know, say another £50,000 as dividend from the pharmacy that you own. Would you then pay separate tax on when you take all that money out?
No, no, not on the actual dividends tax, because your dividends tax is going to go on your self-assessment. You could have like 10 different revenue streams through 10 different limited companies. You've only got one self-assessment to do. So it's all going to end up on that self-assessment and calculated through that self-assessment.
Okay. Yeah. So again, the self-assessment is a separate tax that you pay on top of the corporation tax. So that took me a while to figure out afterwards when I first started. So you've got your corporation tax from the limited company that you pay on any money that you earn. But once you take all the money out from that business, there is a self-assessment, and you have to pay tax on that one separately.
But the corporation tax, which is the company tax, plus the self-assessment, when you're under the limited company structure, those two taxes combined are a fraction of what just a self-assessment on its own would be as a sole trader.
Yeah.
So example that we always give is £50,000, because we always believe that to be the least amount a locum should earn as a full-time working locum in a year. So on 50K, if you did it as a sole trader, just sole trade on its own, you're looking at about 16, potentially 17,000 in tax to pay. If you do it as a limited company, the limited company would have about 5 to 6,000 in tax to pay. And then even if you add dividends on top of that, so let's say you did manage to get 38,000 in dividends, that's going to be like another 3.5K. So if you add that on, you're looking at 8.5 to 9.5 for you to receive all the income into your personal account. You've paid in tax, so 8.5 to 9.5, opposed to paying 16. And then once you get above the 50K mark, which most locums are going to, that difference becomes greater, because the sole trader will then be paying 40% tax on everything above 50, but the locum working through the limited company wouldn't. So even when you add the two taxes together through the limited, it's still thousands and thousands of pounds less than a sole trader.
Yeah. So I've always, I think from day one, I registered as a limited company, and I've always, I think the first 3 months the first 3 months I locumed, it was under sole trader, and I didn't really have much information about that. And then as soon as I found out about the limited company, registered, I think within 3 months, and for everything, I've always been registered through limited company since then. Right. So, any other questions, Imran? Anything else? Any other common questions that people ask?
Not like a question, but people will ask about how to record the information. And from speaking with all the locums over the years, I think one of the best ways is just a paper diary. So what locums will do is they'll just get one of those small A5 diaries where each page is like 2 days on it. And when they're negotiating rates and booking in shifts, they'll just put the name of the branch down where they're going to be working, put the postcode of the branch down, because whilst they're speaking with the coordinator or whoever, they'll record that postcode down, and then note down the hourly rate that they agreed, so there's no confusion later on. Note down any extras they might have agreed, and then note down what's the total that they're expecting to receive. And then when they get off the phone or get off the text message, they'll then just put that postcode into Google, double the figure, so that's the journey there and back, and then record the mileage down. And then, say after 30 or 60 days, when you're looking back at your diary, after 60 days, everything that's past 30 days, so from day 1 to 30, everything should have been paid, because it's been 30 days. Like from when you did your first shift, it's been 60 days. From when you did your shift on day 30, it's been 30 days. So realistically, they should have been paid. So whenever money comes into the account, they'll cross-reference that with their diary of what they were expecting from that, and they'll tick it off to say, I've been paid this amount now. So then when you're looking back through your diaries, quick and dirty way, just be able to see that one's not paid me because it's been 60 days, still not got a tick next to it. So it's just like a helpful way for them to kind of just keep a track of how.
What I used to do was, if I have a locum on the weekends as well now and again, is I use Google Diary. So and then I color code it. So if I've done a shift, I'll obviously put all the details on. You can link in the Google Map there as well. Put your code, the postcode of the workplace down, and on the notes, just make a note of everything there. The hourly rates, anything else that you've negotiated, and then I'd normally color code it red until I've been paid. So, and then when you look back at your diary, each month you can see all the greens and the reds, and then you'll know which shifts you've been paid for, which one you haven't. And actually, with the Google Map, you can link it into your normal phone diary, whether you've got an iOS or Android. You can still see the Google Maps on your phone, and you can just quickly go through them, go through the month and the days that you've not been paid for, and check your payments up. I used to have on the diary before, but I found personally Google Map works really good for me. If you got an iPhone, iOS calendar, that might work as well. But yeah, that's either way that you can do that. I think there's some banks, if you have a business, they give you access to a bookkeeping software. I think, is it Monzo or Starling? I think if you have a premium business account, which I think £5 a month, they'll give you access to QuickBooks or Free Agent, as long as you've got an account with them. It could be £5 or £10, but once you have that, you can make a note of that as well, and you can link it to your bank account. So whenever payment comes in, you'll get notification on there to say you've been paid for that. So I find that quite useful as well. Is there a way to claim travel or write it off if using public transport and not driving?
Yeah, you can. It is a genuine business expense through your limited company, and you can claim the cost of that.
Yeah, but I think with those you have to keep your receipts, and then just keep a copy of your receipts on your phone or on your folder, just wherever you keep all your receipts. Just when you submit them, then you can submit all the expenses with the proof as well. But I think with mileage, you just put down the mileages, and you don't have to show any proof with the mileage.
No. If they ever audited it, it would be just showing, like you've said, either your Google diary or your paper diary to show these are the branches where I've worked, and they can work out the mileage for themselves.
Yeah. So we were going to keep it for an hour this time. Last time we went over by almost 2 hours. If you guys haven't got any other questions, we're going to end it here today. And then I'll record, I'll download the recording, and I'll post it on my YouTube channel, and I'll put a link on our website as well. You can just check on there anytime. I've seen Imran's got his number on there. If you guys want to give him a call and book in a meeting, and obviously it's free to have the consultation, have a chat with him, give him your details, and then he can work out whether it's worth being sole trader or limited company, and then you can take it from there. Imran, anything else? Any last words?
No, that was good. So if anyone wants to get in contact, send me a message on WhatsApp, and I'll get a call booked in for you this week.
Cool. Right, guys, have a good weekend, or whatever's left of the weekend. And I'll catch you guys on the Telegram network.